Hello, everybody. We're very, very honored to have with us today Mr. Gregory Mannarino, a man that knows what's going on in the equity markets, plays them, trades them, and knows them. And as I see it right now, as we're going into March, I believe that we are on the precipice, and it may have already happened, of March economic madness. This may be the month that everybody wakes up, the fraud's over, and so is the game. Mr. Mannarino, thank you so much for being here. What's your take on this?
Joe, thank you for having me. Love being here. Love you. Love your show. I've been a fan of yours, like I said, for so long. I can't even tell you. Anyway, with that said, absolutely. Look, I think what people need to keep in the back, look, this economy, this whole entire freak show is on a knife's edge. And anything can push us one way or the other. What we have here, if you want to just take a quick snapshot looking at the equity markets and the associated risk with that, it continues to rise. It's getting pretty much out of control now. Historically, for this month, the markets are kind of wild and they're rough. But I think there's a lot of effort right now, at least from my perspective, to try to keep this whole thing afloat a little longer. Again, it's a game. We have central banks in here. And it's such a charade. Oh yeah, we're shrinking our balance sheets. Oh, we're raising rates. It's going to be tremendous and fantastic. Our economy is doing so fine. Meanwhile, the economic data doesn't stop. We're in a free fall, not just here in the United States, but around the world. Global economy is contracting. Real wages falling off of a cliff. Home affordability at an all-time low. 68%. 68. This just came out today. 68% of American families could not survive if they lose one paycheck. I mean, this is the so-called strong economy that we have right now. It's over. It's absolutely over. And with regard to the stock market, it's completely disconnected from any kind of reality. There is no price discovery mechanism whatsoever at all anymore. And it's this artificially suppressed rate environment that we have had since the last meltdown that is doing nothing but keep this artificially propped up. It's going to get real. It's going to get real, as you know, and I know, and I think everyone who follows our work knows. But look, it's at a time when they choose. I believe central banks, all of this year, this is a scheme. They're pushing the global economy off of a cliff there. And how do they do that? How do they slow the economy? By their own admission, by raising rates. They got to kill the consumer. Kill the consumer. So they're killing the consumer. People can't get by anymore. Credit card debt, household debt, personal debt, ballooning. It's not going to stop. It's got nowhere to go but worse. This is an extermination. This is an extermination of an entire class of people on a global scale. I'm talking about the middle class. They're being systematically erased.
I agree 100%. The data shows it. In America, back in 1970, some 61% of the people were middle class. Now it's 50%. Yeah. And middle class isn't middle class because you can't live on it anymore. No. And you have the 1% that own 54% of all the stock market, the equities. Mm-hmm. Yeah. And you bring the 10% in, they own 90. And all we've become, as I see it, are plantation workers on the global plantation of Slavelandia. You mentioned about the 68%. How about the 64% that are living paycheck to paycheck? Middle class is gone. Housing is unaffordable. And what you said is that it's a freak show on a knife's edge. Yeah. And to me, that is perfectly what we're talking about. It's a freak show. Look at the freaks that are at the head of the show. Who's your top freak in the bankster system? I mean, now there's a real handsome, cool cat. What was his name? Ben Bernanke? No, he took her. And then there was Janet Yellen, Miss Facha Brut. Oh, she came next. And now we got this little arrogant guy, Jerome Powell, who bullshitted that inflation was temporary and then transitory. And now you said it's global. How about the freak show over there in the EU with the ECB head, what's his name? Christine Lagarde. Mm-hmm. Oh, yeah, if only women were in charge. Oh, Yellen and Lagarde, they're two women. Oh, bankster bandits. Oh, yeah, forget about that. Mm-hmm. How about Christine Lagarde? What was her last job? head of the IMF, the International Mafia Foundation. Oh, excuse me, Monetary Fund. Yeah. And there's no inflation. Salenti, you're full of crap. There's no inflation. I am the Fed head. There is no inflation. You're full of shit.
Yep.
That's the freak show.
Well,
That's the freak show. And it's a political freak show, and it's a bankster freak. Oh, now, Jamie Dimon, now there's a real man. Oh, that's the bankster bandit. Oh, and how about, who's your favorite? Mitch McConnell? Guy got more chins than Chinatown. Hey, Lindsay, did you come out of the closet yet, Graham? Oh, I'm going to take orders from him. Chucky Schumer, Adam Shit. Look at the freak show, and we're on a knife's edge because of this freak show.
Yeah. Well, you know what they do, and it's an amazing thing. They float out members of the freak show to dictate our lives, to tell us what we should think, what we should feel, where we should look, the distractions, the deceptions, all the stuff that people that follow my work and your work are well aware of is unfolding right before our eyes. And it ain't getting any better. It's not this whole peaking and transitory and temporary. We were sold a lie, and everyone knew it was a lie since day one, who at least follows our work. They knew it was nonsense. It's kind of astonishing. Last week, they floated out Janet Yellen's stain. I call her Yellen Stain because she's a human stain. To tell us that prices are coming down. They tell her the same day that we find out that prices are not coming down, the same hour. They float her out. Oh, prices are coming down. They're dropping. Yes, listen to me because I know what I'm talking about. I'm an authority figure. Yep. This is what she looks like to me. I can't stand it. I can't look at these people. I can't listen to these people. All they do is lie. They lie and they lie and they lie some more. Like this freak right now, Powell, right now, before the Senate committee, banking committee or whatever, and they got to kiss his feet. Thank you, sir. Thank you for showing up. Thank you for letting us talk to you today. Are you kidding me? Are you kidding me? And then you're going to listen to them. Our so-called representatives telling us, oh, it's so important for the Federal Reserve to maintain their independence. They must remain independent. Really? Why? So they can have no oversight? So they can do whatever the freak they want, off balance sheet, on balance sheet, and everything else? You got to be kidding me. This is the freak show. And, it's all distraction. It really is. It's unbelievable. But people are suffering, as you well know. And nothing gets to me and you more than that. Watching the people suffer. And they're going to suffer a lot more moving forward, unfortunately, in my opinion.
You mentioned about being independent, the Fed. They're controlling the government. I mean,
they are the government.
Yeah. And Janet Yellen, again, I call her Miss Fatja Ruth.
Yeah, that too. The ugly face. That didn't even come close to what it is.
What was her last job? Before she's Treasury Secretary now?
Yeah, she was the Fed chair.
And now she's the Treasury Secretary?
I know.
What am I, 6 years old? I don't see this bullshit right in front of my eyes.
Yeah.
And you're talking about the banksters. Once upon a time, it's coming up now. It's called Easter Sunday. And it was about the Prince of Peace. And this is a cover from the Trends Journal.
Yeah.
Back in 2000, let me see when this is. This is an Anthony Frieda cover. He's a genius. This is when it used to be a quarterly. 2012. You see that?
Yep. Yeah. Get him out of the temple. Well,
Wells Fargo, JP Morgan Chase, Goldman Sachs. Nothing has changed. Oh, and by the way, after Christ drove him out of the temple, 3 days later, he's on the cross. You don't screw
yeah. Imagine my shock.
Yep. And that's who's running and ruining our lives. That we have a central bank. Again, look who brought it to us. Woodrow Wilson. May he rot in hell. He gave us World War I. And everybody, he gave us federal income tax and the Federal Reserve. America, America. Amerika. You're spelling it wrong. Yeah. So anyway, give me your assessment on when it's only a wild guess. But again, I believe that I'll tell you why March. March is in October are the two volatile months that I've seen in equities. Mm-hmm. And, I made my reputation when I called the 1987 stock market crash. It's October. And I called the dot-com bust and the panic of '08, took out that domain name in 2007. Going back to the October 1999, in our Trends Journal magazine, we wrote that the markets would crash. The dot-com bust would happen in March. No, excuse me, the second quarter of 2000. It happened in March, so we write on by the second quarter of 2000. So I believe we're in that process now. I'll tell you, we have to find out if, here's my forecast. If they raise interest rates 50 basis points when they meet in, was it March 23rd or something?
Yep.
I believe the markets are going to crash and the economy is going to follow. And what everybody has to understand, that the interest rate hikes that have been going up, it takes time for them to hit through the economy. It doesn't happen in a day. It takes several months. And we're on that path. So anyway, that's my take. What do you think? We're going to take a break now. We've got a lot more going on. And this is why you subscribe to the Trends Journal.
Get the Trends Journal, the best investment you could make, because it's the best investment into your mind, and it can change how you look at the world.
Over the last 30 years, Gerald Celente has been more accurate about predicting what would be happening than anyone else I'm aware of.
The Trends Journal is one of the greatest sources of information, and and it really is. You're predicting these things well ahead of time. I would encourage everyone to go grab the latest copy.
Been a Trends Journal subscriber for 20 years. I just have to commend you. What you guys have put together in your latest Trends Journal, there's nothing like this out there.
Sir, everything that you predicted about the economy, you were absolutely right. So I have followed you all this time. So please take a look at the Trends Journal.
You correctly forecast that the Fed would hike rates quite aggressively, correctly said that initially gold and silver would drop as the Fed starts to raise rate to 1.5% and above. When we spoke last, Bitcoin was around 49,000. You said you expect to drop, and if it drops below 30, 35, then it could really drop.
Trends Journal, which I would encourage people to go and check out. It's actually a 200-page document, pure data-driven analysis.
Gerald Celente, the top trends forecaster in the world. Gerald, you had an interesting call back in September of last year. You said gold had bottomed, which is exactly what happened. And here we are, and we're above $1,900.
Subscribe to the Trends Journal. Read history before it happened at trendsjournal.com.
Well, absolutely. I think that, well, let's just put a couple of more perspectives on this. So yes, there is a lag effect with regard to what the Fed is doing with regard to their raising rates here. I believe, unfortunately, for what I am seeing here now, that we are going to get a 50 basis point hike. Now, I came up with a little metric that people can, it's free to anyone who wants to look at it. It's right on my website, traderschoice.net. It's called the MMRI, Mannarino Market Risk Indicator. It's a neat little equation which equates risk in the debt market, which is reflective of what we can see in the stock market in real time. Right now, that number is sitting at almost 260. When we hit 250 on the MMRI, I was telling people for months, watch for the first red line in the sand, 250. This market, since the MMRI crossed 250, we've seen this market fall under pressure. Now, and I've also been explaining to people, without direct intervention by central banks to do something about that, we could absolutely see, well, the next line in the sand is going to be 300 with regard to the MMRI. If we get there, Gerald, your prophecy here is going to happen. It's going to come true here. We're on a knife's edge. Anything can set this off, and I mean anything here. We'll see. I believe there's going to be some kind of an event here that's going to just miraculously happen. Unfortunately, people are probably going to end up losing their lives, a lot of them. And that's going to push people more towards backing an expanding war. I think this war is going to get a lot bigger, unfortunately. And this may be the pivotal moment here. But that would be, if the war does expand, which I believe it will, believe it or not, this would be stock market positive. I hate to have to say that, but this is the truth. Look back on the last couple of world wars.
Oh yeah.
And you know what better than anybody, because you coined this. When all else fails, they bring you to war.
Yep.
And that's true what they're doing here. So this would be a mechanism that they could use, because all they care about is the stock market. They don't give a damn about the regular guy or the regular girl here. It's just about propping up this damn stock market. And look, the investment banks, they don't care either. They don't care if the market goes up, down, or sideways. They're going to make money because the way they play their positions, and they profit from their own customers when the market goes down, when they have all their customers in long positions in the market. That's what they do. It's a scheme. But anyway, it's very possible that we could see a big event here. But again, I don't think people need to guess. I think I created this MMRI. Maybe you can use a link to that. It's right on my website, tradecheers.net, top of the second page, which allows people to see risk in the market in real time. Right now, this morning, we were about 257. Above that 250, we've learned, okay, and just from observation of the market, that is that first red line in the sand. If we continue to go up and we continue to see global debt sell off, we got a big problem. We got a monumental problem here. And they know it too. They know where this is going to go. Absolutely. And they're fostering it. We have a global economy contracting at its fastest pace ever. At the same time, they're raising rates into that, killing the consumer, causing people to become slaves to their system, dependency. They need more dependency on the system. And they're going to get it too. Did you hear a lovely, illustrious president? I can say some really nice, choice words about him. He's going to be boosting the paychecks for federal employees by the largest margin in over 40 years. And
Wow.
This is, again, he's buying votes. Whether it's going to work or not,
Yep.
I guess we'll see.
That's what they do.
Yeah, I did. Look,
That's
this
why they
whole
keep
thing.
building the bureaucracies. They keep getting them bigger and bigger, so they get more and more votes for themselves.
Exactly. And then then the dependency on the system is, I think, the key here. They want more people dependent on it and then they're going to pull the plug on it. And this whole thing, it's not by accident. They're going to bring this thing to its knees. And then who knows? We'll get a war, an expanding war that'll prop up the stock market, pick up industrial production. And, energy, I think, is going to skyrocket moving forward here. Looking at commodities in aggregate, I think that's the place to be long term. This is just, I'm just throwing some stuff out here.
Let me go on the energy. Let me stop on that.
Yep.
You're talking about war.
Yeah.
What's not making the mainstream media is what's going on in Israel. They only put up little bits and pieces of it.
Mm.
There are, we write about it in detail each week in the Trends Journal magazine. And what's going on now, and again, this is not our language. This is coming like from the Financial Times, the Wall Street Journal, the far right extremist government of Netanyahu.
Mm-hmm.
So what they're doing with the Palestinians is one thing, and now they're ramping up talk about escalation toward Iran. They're bombing Syria anytime they want. They just blew up a couple more airports, in Damascus and Aleppo. But here's what's going to happen. As you mentioned, I always say, when all else fails, they take you to war. Each week, for the last several weeks, hundreds and hundreds of thousands of people are taking to the streets in Israel against the judicial reform laws that Netanyahu wants to put into place, which means there is no judiciary anymore. The politicians decide. So, as I say, when all else fails, they take you to war. He has to stay in office because he's going to be brought up on trial for corruption charges and any other things. As long as he stays in office, they can't touch him.
Mm-hmm.
So again, to get the people's mind, if they wrap this, if there is a military conflict between Iran and Israel, you're going to see oil prices, I believe, go to over $130 a barrel for Brent crude.
Mm-hmm. Oh, absolutely. That is going to happen. There's no doubt about it. I've been telling people that for the longest time. I think people need exposure to commodities and natural gas as well, though that's been quite a wild ride lately. 100%. This is where it's going to go. You can see the writing on the wall. That's where they're bringing us. That's what they want. Henceforth, why this tremendous new budget that they're putting forth with the Pentagon, what is it, another $1 trillion almost? It's unbelievable. But okay, they're going to do this, and we're keeping our people informed. We're letting them know what's going on. And it's, knowledge is power. Knowledge is power. And we need to keep our people at least in the know. And I think there's probably, honestly, I'm just going to say this, and I may take some heat for it. I don't think there's any two better guys than you and me that are keeping our people informed. I tell you the truth. I really believe that.
Yeah. No, we're doing everything we can. And everybody put that link to go to traderschoice.net and
check out the MMRI.
Yeah,
it's an
I'm
amazing
gonna be
tool.
looking at that. And staying on with the with this market and what's going on, and as you said, there's a lag effect of is that the word that you used?
Yeah, there's a lag effect. When they're raising rates, there's always a lag effect. And we haven't even begun to see, we haven't even begun to see the effects of this at all. And it's going to get a lot worse. So what are they doing? They're trying to, like I said, how we started out earlier, you know this, they're destroying the economy by design. They're destroying the economy by design. They're killing the consumer by design, creating dependency. And then we're going to get a new system that's going to be one of maximum control. In my view, that's where I think we're eventually going, this whole, on a worldwide scale, not just here.
Well, it's as we wrote about this 3 years ago, it was the cover of the Trends Journal back then, from dirty cash to digital trash.
Yeah, I remember that.
And that's what they're going to do. Mm-hmm. They're going to get rid of their $31.5 trillion debt. They're going to say something like the Russians hacked our banking system and you lost your money, but don't worry about it. We came out with a new currency. Everything is fine. Yeah. And so we're going to go from dirty cash to digital trash. In this week's Trends Journal, there's a big article about India. Mm-hmm. And that's this week's Trends.
I love that. Yeah. Oh, that says it all.
And India, boop, all it is digital. All it is digital anymore. And I remember when Modi did away with the rupee, that old rupee's no good. We're coming out with a new one. That was a couple of years ago. People have no idea about that. All forgotten. And now China, we're going toward they're on a leading edge of going digital. Oh, that's only a country of 1.4 billion. Oh, and you talked about defense budgets. Another guy that really fights for freedom is Judge Andrew Napolitano, another paisano. And I do an interview with him every week. And I mentioned this week that the business of China, as I say, is business, while the business of America is war. America's defense budget, it's almost, $860 billion. When you put in the intelligence, which is an oxymoron, the CIA, NSA, it's over $1 trillion. We have 332 million people, $1 trillion roughly. China, 1.4 billion people. You know what their defense budget is? 224 billion.
What is it?
224 billion.
224 billion.
We have almost $1 trillion. They have two. So anyway, this is where it's going. And going back to what you said about the war, this is important. Last Friday, Olaf Scholz, the Chancellor of Germany, made a trip to have a summit with Biden. He brought no reporters with him. He flew in alone. They met for 1 hour, and there was no staff reportedly in the office. It was a conversation just between the two of them. Scholz got back on the plane and went back to Germany. I'm mentioning this because that's very strange.
It is very strange.
Because they're not talking about what they talked about. They wouldn't mention a word. So the question I have is Germany ramping up the war with the United States to fight Russia, or are they going to pull back? I'm just throwing the question out.
Yeah. I would say they're probably, look, what are they doing? They're obviously setting up alliances. This has been going on for a really long time.
Oh, yeah.
This whole thing, as you well know, the business of the United States is war. Okay.
Yep.
The propagation of war, the expansion of wars, this is going on in perpetuity. It won't stop, unfortunately. So yes, alliances are being made, deals are being made. Cash is moving around here, and all this. Whoever believes seriously that we still have any kind of resemblance of a free society at all, you got to be nuts. It's over. It's absolutely over, unfortunately. And they're pulling the strings. People are being strung along here. They're being told again what to say, what to think, what to believe via the mainstream propaganda ministries. Why people listen to that stuff, I have no idea. It's just out of control. It's about control.
This was the cover of the Trends Journal back in 2014. You see how happy that guy is? It's the American overthrow of the democratically elected government of Viktor Yanukovych in Ukraine. The article was written by Dr. Paul Craig Roberts, former Assistant Treasury Secretary under Ronald Reagan. People have no idea about what went on there, what went on before then. They have no clue. And like you said, the people just follow. So in following what you're doing and what you're forecasting and what you're giving the people that go to Trader's Choice, what do you think about gold?
I love it. I got gold and silver all over my desk here. I got pieces everywhere, all over. More. I got it everywhere. I mean, I can't tell you. I love it. I've been telling people since day one to do one thing, that is bet against the debt, become your own central bank. And that means holding hard assets here. This is my favorite asset of all time. I got it all for silver. I think it's the most undervalued asset on the freaking planet Earth. I think people need to hoard this stuff. I love gold. Don't get me wrong. But what I do, and I want people to do their own homework on this and why I say silver, and people can have their own opinion, but I look at a certain metric. I look at the Dow gold ratio, gold silver ratio, to see which is the most undervalued. And at this point, what that tells me is silver is and I mean in my opinion, and I want people to do their own research, undervalued asset on the planet right now. And I think honestly,
there's another element of why silver is very valuable, and that is it's used throughout the whole high-tech world.
Oh, yeah, absolutely.
It's in all of these devices.
Mm-hmm.
And unlike gold, you don't throw it into the ground when you throw your computer away or your cell phone. You save the gold, but the silver just keeps getting thrown away. So there's no stockpiles of this stuff.
Interesting.
And then, as again, like it or not, as we said, going green, there are more and more silver's used in solar panels and a lot of the so-called green devices. So I agree with you. It's very, by the way, I bought silver back in, God, it had to be 2000, I think around 2011, for like $40 an ounce.
Yeah, I bought it then too. I started buying it was maybe $6. I bought it all the way up to like $40, and I think it doesn't matter. I don't care what they want to do to the price of metals here. They want to rig it via the derivative. That's what they do. They play the game. It's an incredible thing where the hard asset price is set by the derivative. It's upside down. And this is how they manipulate the price of gold, silver. Let them do it. Let them play their game. People that follow our work are going to play our game. Bet against the debt, become your own central bank, hold hard assets here. Looking down the line, in my opinion here, people need to have exposure to commodities. You can do this many, many ways. All this stuff is, I talk about it all the time, but that's where we're going here. I mean, it's pretty obvious to me and you, and I believe the people that follow us here. We're watching a systemic meltdown here, and it's by design. It's all coming apart, and we're on a knife's edge. It's just not going to take much to push us off, not anything at all. And then this ball will really get rolling. Then you're going to see rioting and people in the streets, and that's when people are going to wake up. Right now, they're all being lulled into a sense of I don't even know. They don't know what to do with themselves. They don't know why they're doing it. People wake up every morning. I don't even think they know if they're human beings half the time. People have been so indoctrinated into whatever it is, unfortunately, but not the people that follow our work. We are waking people up, and they're waking people up, and that's important. I mean, it's really is.
With all due respect, they do know that they're human beings. They just don't know what gender they are.
That too. They're very confused.
I'm not sure who I am today. Well,
exactly.
What did you grow one? again, it's I want you mentioned something, so I want to get back to it. About the dollar. So here's my take is what's going to happen. And it all goes back to gold and silver, by the way. Number one, as I said, I believe the market is at the precipice of a crash. Gold prices are going down because the dollar is getting stronger as they're raising interest rates. That's the only reason the dollar is strong. In the meantime, day after day, you're hearing more and more reports of India doing away with the dollar, of China doing away with the dollar, of one country after another doing away with the dollar. Brazil, they don't want to deal with dollars anymore. So the dollar is only strong because of the high interest rates. When interest rates go down, the dollar is going to go down. And this is the beginning, as I see it, of the end of the dollar. Number two, although gold goes down when the dollar gets stronger, the dollar is getting stronger because they're raising interest rates, which is going to crash the economy and the equity markets. And that's when gold doesn't care how strong any other currency is. When the equities and economies go down, gold goes up. Oh, and if you don't believe me, how about the central bankers in 2022 had a record year of buying gold because they know where this is going?
This whole thing is really, really simple. This is how I like to think about the dollar. Okay. I look at the relative strength or comparative strength of the dollar, for which the dollar isn't the prettiest belle at the ball. It's been that way for quite a long time. And then I look at the absolute strength of the dollar, which is fading away. That's henceforth why we're seeing inflation go crazy as it is. Now, understanding that, let's just talk about how cash moves through markets. Okay, it's so easy. Okay, we've had this artificially suppressed rate environment now since the last meltdown. There's reinflated a stock market bubble. It's reinflated a real estate bubble. Okay, created, and not just that, it's created distortions of an incredible magnitude across the price action of assets across the board. Now, this is how it's going to play out, and I can't imagine another way. I've thought of this a million times, and I've repeated it in my brain a billion times here. So we got this bubble in the debt market. It's a monster. It's a Frankenstein. And the debt market, and this goes back to what the MMRI is measuring, risk in the debt market, and it reflects the risk in the stock market. We're going to get a meltdown here in the debt market, a massive sell-off. And we're going to see that sell off, and that's going to cause rates to spike in an uncontrolled fashion. When that happens, and it's going to, in my view, you're going to see that put pressure on the stock market. Stocks are going to melt down. This could happen this month. Again, if we watch the MMRI spike, if we watch global bond yields could start to spike, which they've been doing recently. Okay. So sell off in the debt market, rate spike, puts pressure on the stock market, and cash just moves it bleeds out of the debt market, bleeds out of the stock market, and moves into commodities, gold, silver, crude oil, and everything. That commodities in general are going to skyrocket. I mean, it's very, very simple. It's just cash doesn't grow wings and fly away to money heaven. It just moves from one set of assets into another. And the scenario is very simple. Debt market meltdown destroys the stock market. Cash moves into commodities. And I also think it's going to move into some cryptos as well. That's my take on it. And I can't imagine it unfolding another way, because you can watch this almost in real time. Every time we see the global debt market sell off, yields start to spike, equities start to fall under pressure. It's very, very simple. This is going to unfold in a dramatic way at one particular time. And that's why we're going to see assets like superiorly undervalued assets, in my view, and I believe yours, as gold and silver, they're going to take off. Take off. And who knows?
I agree. I agree. How
big this can be.
The other thing about interest rates going up, now the cost on debt goes up. So now,
yes. They never talk about that, do they?
They don't talk about that. The government in 2021, the national debt was $5.7 trillion. Today it's $31.6 trillion. Now you got to pay more on that debt as your interest rates go up. Now let's take a global look. The dollar's strong, and all of these emerging markets owe their debt in dollars, as their currencies are going down. You're talking about people taking to the streets. It's already happening, and it's going to accelerate. Number three on this is that the debt on variable rate mortgages and loans.
Oh, forget about it. Forget about it.
Yeah, exactly. Forget about it because nobody's talking about it.
Yeah. Well, there's a reason for that too, obviously.
One of our top trends is office building bust.
Yeah.
Your office occupancy rate in the United States, according to Castle, that's with a K, is 50.4%. So now all the businesses that depended on commuters, they're going out of business. The hotels that depended on business travel, they're suffering big time. About 10 of them already went busted last year. And now your office buildings where people aren't going back to work, they're only going back maybe 2 or 3 days a week. Why do I need all these floors? No, I'm not going to renew this lease. Oh, and now I'm the property owner, and the kind of loan that I have, every 2 or 3 years, it goes back with the interest rates going up. Now I got to pay more on my debt.
Yep.
And I got a lot less money coming in. We are going to see a bust in the metropolitan areas like New York City, Chicago, Atlanta, San Francisco. Yeah, I left my heart in San Francisco. You lost your money in San Francisco. They turned that place into a crap house. I was going there back in the day in the 70s, staying at the top hotels in the 80s and the 90s. And then it became a whole different place by, the middle 2010. I didn't like the joint anymore. And now they overbuilt that. The geeks were the first ones to tell the people to stay home. And now they gave it to themselves. They are staying home. And that's geek world. So I think we're going to have an office building bust and a crash, the likes of which have never been seen in modern history.
You're absolutely right. And I think what people are also not thinking about what's going to happen, and I was talking to Michael Pinto about this. Have you had Michael Pinto on your show? You should.
No, I haven't.
Good guy, financial guy, knows what he's talking about.
Well, I was on Fox with him years ago.
Yeah. He used to be on CNBC all the time. Anyway, we were talking, and I've been talking about a credit freeze for years. I think we're going to end up in a situation here. So what people forget, the meltdown, the big financial crash of 2008, it wasn't so much that the markets were crashing. No. It was that liquidity was drying up. That's why they had to inject the system with these massive capital injections and the TARP program and everything else. That's going to happen again, but to a much larger degree. I believe the credit markets are going to lock up. Once we get this big sell-off here in the debt market, it's going to freeze. In other words, see, what people need to understand is the system itself is completely insolvent. It can never be fueled with enough debt. No matter what happens, it constantly is growing by exponents. Now we're going to get a credit freeze. It's going to lock up. The whole system is going to lock up. This whole system is going to lock up, meaning transactions stop. No cash in the banks. No ATMs. It doesn't work. Checks don't work. Nothing. It just stops. We're going to end up in that kind of a scenario as part of this massive crash that you just alluded to.
It's happened before.
It's happened before.
Holiday. We're going to have a bank holiday.
Yep.
It ain't ancient history. What a holiday. I can't get my money out. Now, not only can't you get your money out, turn in your gold or you go to jail. Oh, yeah. That was on the FDR, huh? Yeah. How about FUCK-DR? Yeah. One little, and also I want to mention this, because you briefly hit it, about what they did when the Panic of 08 happened, about all the dough they pumped into the banksters.
Yeah.
29 trillion, according to the Levy Institute at Bard College. That's how much they injected into the bankster bandits.
And they'll do it again. They're gonna, but that's the vicious. The more if they do, they're going to keep playing this game here, and it's massively inflationary. What people don't understand, all this spending, all of it, all it does is dilute the overall pool of currency, and we end up with this inflationary environment. It's amazing how we're told to believe that these central bankers didn't see this coming. They didn't see this issue
Oh.
here. Meanwhile, people like you, people like me, and all our followers knew this was coming because we kept them knowing what's going on here. They knew it.
Yeah.
It's just crazy. I'm actually I was short the market this morning. I just closed up put. You might have heard that little noise in the background.
Yeah.
I'm just moving a little money around as I'm talking to you.
Move that money, baby. And
It's so
listen, I want to
silly.
thank you for being on, and thank you for all that you do, and not especially, but including your contributing to the Trends Journal every week. And we feature Gregory Mannarino's articles right there at the top because they're so important. So
I hope people understand how important this publication is. I mean, they're not going to get this information from anywhere on the planet Earth. And if people don't subscribe, I don't know what they're waiting for. I really don't. You need to subscribe to the Trends Journal. I mean, it's a fascinating piece of work. It's on the cutting edge. If not, there's nothing that comes close. Nothing.
thank you. Yeah, there isn't. There's no magazine in the world that covers socioeconomic and geopolitical trends and gives you the trend analysis of what it means and the trend forecasts of where it's going. It's gone. Nobody does that. And I want to thank you for contributing and all that you do to help people in so many different ways. So remember, go to Mr. Mannarino's site over there, traderschoice.net. And I want to follow that.
MMRI.
MRI.
Top of the second page. I honestly think it's the best risk indicator that's ever been created. It's I'm a little Dr. Frankenstein that came up with. It's a very simple. It uses the 10-year yield, the relative strength of the dollar with a little bit of voodoo in there, and it comes up with a number, and it's been insanely accurate. It's free.
Yeah.
It's free to everybody. So
right.
I'm not selling this. I want people to utilize that resource.
And by the way, the Trends Journal is almost free. It's like $2.70 a week.
It's unbelievable. And
That's
people
all. Yeah. So we're trying to give the people everything we can. And again, I want to thank you for everything that you're doing and how you're informing people. And the information is invaluable. Thanks so much, man.
Thank you too, honestly.